Welcome back everyone to another update video on Vonovia. Today we will talk about the more recent developments of the company. So, is there finally hope for Vonovia after more than 2 years of, let's say, going in the wrong direction? When we look at the chart, it looks like we might have found the bottom already in March 23. We saw the lowest low there at around 16 and chances are that we made the turnaround already from there. Before we talk too much in detail, let us look at one question to help you categorize Vonovia stock. What is it all about? What's the deal with Vonovia? And why is there a chart that looks great until August 21 and from there on the whole thing just crashed? What we have here is a good company with a very good and bulletproof core business model on the one side versus a debt situation that became more and more pressuring over the last 2 years and a political situation that has a complex impact on the company on the other side. And the chart is showing us that the market has adjusted more to the importance of the negative points over the last 2 years, especially to the debt situation. Let's take a look on a few recent numbers so we can get an idea about how the business is running. Revenue and FFO are down just by a few percent. The vacancy rate has stayed around the same at 2%, which is quite good. The company now owns around 548,000 units, which is around 12,000 units less than in 2021. So, is this a sign that there's something wrong with the company? I wouldn't say that, because if we look at the slides from the 9-month presentations of last year, we actually see that Vonovia has sold units continuously over the years, especially after acquisitions like we see here in 2014. And here we see the Deutsche Wohnen acquisition. Deutsche Wohnen has around 140,000 apartments and Vonovia holds around 86% of Deutsche Wohnen shares. Yeah, and here it says they sold more than 110,000 units since IPO in 2013. Just recently, the company announced, once again, that the core business is running very well. They speak of almost full occupancy, with around just 2% vacancy rate. Since also the rental revenue slightly went up, I think I can agree here. Now what about the dividend? Just 1 year ago, CEO Rolf Buch said he doesn't see any reason why to cut the dividend, and it was aimed to have a dividend of around 70% of FFO every year. But instead of the expected €1.77, surprise, surprise, the dividend was cut in half to around 85 cents. The CEO, Rolf Buch, said, quote, "The company has to strike a balance between two different sets of expectations from its owners. One group of shareholders wants dividend continuity, while the other one demands special capital discipline. Both are equally important." In my opinion, this shows that the company is still committed to its owners, the shareholders, on one side, but it also shows on the other side that what was just said a few months ago can change quite fast, and we as private investors must be very careful to not just take everything that's said at face value, even not what was said by the CEO and the top management. Now to the debt situation. Net debt went down by around 1 billion compared to the year before. They have fully covered the maturities until end of 2024. So in August, they almost got the next 1.5 years covered. The CEO also said that they will continue to generate liquidity by selling additional units for 2025 maturity. All in all, Vonovia has announced to sell around 60,000 units in total to cover the maturities for the next several years. And something that you might have seen in the media, the market saw it as a positive signal that the company bought back 1 billion of debt for only 900 million euros. They did that by buying back their bonds below the par value. That's a positive signal for the market, but of course we have to see the proportions here. This was 1 billion, the company has around 42 billion of net debt, all in all. In my opinion, the thing with debt is it's not a big problem until it's a big problem. As long as the company is able to continue borrowing money from the market and to roll over the debt, you can rule out worst case scenario like bankruptcy and so on. Let's hear the CEO on this part.
We will continue to generate liquidity through disposals, not just for the end of 24, but also start turning out our intention to the 25 financial maturities. On financing, Philip and the team has been making good progress with the seamless rollover of all bank debts at this point, plus 1.4 billion of new secured and unsecured loans. So you can see that bank loans are available to us, and we make use of them to manage our upcoming maturities.
So the CEO has just said that bank loans are available to them and they use them to roll over the maturities. That's a very good thing. If the company was not able to do so, they would have a huge problem, right? So right now, yes, they may lose profit for a while due to higher interest rates, but so far they successfully compensate by selling of units. And now let's talk about investments and the influence of politics. Investment went down compared to 2022. During the year, a lot of planned investments were stopped, or how Vonovia calls it, set on hold. According to German Tagesschau, Vonovia has halted more than 60,000 units so far due to rising construction costs and interest rates. We are seeing a crash in the German housing construction, and a lot of construction companies and property developers are in financial distress or even had to declare bankruptcy. Germany would need around 700,000 new units, but in the first 6 months, only around 150,000 new construction permits were granted. And here we can see that they're telling us they put the mergers and acquisition plans on hold because of the high costs of capital. And also the European expansion is on hold. They sold their stake in a French company with profit and now are no longer involved in the French real estate market. My opinion on this is we have a situation where in Germany rental properties have a high demand. The current crisis, that much less properties are built than needed, is not a good thing for Germany on the one hand, but on the other hand for Vonovia, as the biggest real estate property owner in Germany and in Europe, they will also benefit from this. This clearly shows that over the next years, a lot of people will be forced to rent instead of owning their own house. And insofar, that's also a good thing for Vonovia. Valuation. The NTA, net tangible assets per share, is around 49 euros. This basically means here the company itself is telling us if you break down all the assets the company has, market value of real estate they own and the money, minus the debt, the price of one share is worth around 49 euros. Goldman Sachs has kept Vonovia on their conviction buy list with a price target of 36 euros, more than 60% higher than the current valuation is. And when we look at what other analysts say, for example on Seeking Alpha, the overall picture is not as bullish as it used to be, but still all in all rather bullish. The main concern is the debt situation and that the interest rates might stay high for a longer time than expected, and this might continue leading to a declining performance. Another point that the bears brought up is that Vonovia hasn't been really struck by the high interest rates yet. This is correct. The average interest rate they have to pay is around 1.6% only. So yes, the interest rates haven't really hit Vonovia that hard yet. But from the valuation side, in my opinion, this is already priced in, or at least a major part of it is already priced in. So thank you very much for watching this update video. Please hit subscribe. In the next video, I'm going to talk about an apartment that I just rented out and what exactly I'm doing here. And is this really passive income? Let's talk about it. Thanks for watching. Bye-bye.